Evening, everybody. How are we all doing? Hope you're all good this fine Tuesday evening. Normally I like to arrive a couple of minutes before and just check that people can hear me, people can understand me. But it's already bang on 8 o'clock. Just having a look over in the chat. Can someone just give me a heads up to make sure you can hear me and I'm not just talking to myself, as happens. And whilst you're doing that, I'm home alone tonight, which means hopefully it won't happen. Good, thanks, mate. But should the door interrupt because one of my childs has got up, then I might just have to deal with that. But yeah, fingers crossed that isn't necessarily the case. I've actually, it's one of those ones before you start your live stream, I really wanted to try and get a lot of prep into this beforehand, and I've just achieved effectively nothing today, which has been a bit disappointing. But I'm not going to let that distract from the content we've got. We've got a lot to cover tonight, and thanks a lot for tuning in for that. Obviously, we're going to start with some of the news events that we've seen over the last week. A lot of it's been dominated by Silvergate, which we will get onto. Not going to quite cover that in the news section. We'll talk about that a bit later on. But then other events like what we've had today and over the past few days, we'll go over. We will then actually have a look at the title of the stream, this strange BTC price action. And I was praying all day that it wouldn't suddenly spike. So I got a bit panicked earlier on today. But thankfully, it's retraced back into the channel that we've known and loved for the last 5 days. So have a look at what that is, why that's happening, what it could possibly mean in the future. We'll then have a jump into our research token of the week, which was suggested in Discord. And that's going to be Chainlink. It's not exactly a brand new token, I know. But some of you may not have looked into this before. So we will cover that. And then we're going to have a look at some price action. I'm not going to lie to you, unless something drastic happens over the next hour or so. The price action, certainly over the last 5 days, has been pretty dull. So it might just be a case of looking where the overall sentiment is and what we really need to see to break some ranges in BTC and some other altcoins. Anyway, let's just dive in and we'll see where we get to. Okay, let's get on to BTC. You see, it has started to just move south a little bit again, but we'll just see where it goes. So overall sentiment on the charts at the moment, I mean, we're on the dailies here, so it doesn't look like it's crabbed sideways that much. But actually, when we break it down to some of the lower time frames, it just feels very unnatural. It's not unnatural for price action anywhere to move sideways, but generally you get peaks and troughs with this. But this has pretty much been flatline. I mean, we've been trading generally in about less than 1% range for the majority of these 4-hour candles. We've seen some movements to the downside last couple of candles, and we'll talk about that a little bit later on. In terms of the dollar, we've seen a good bounce today from that, which sort of started in and around Chairman Powell's testimony, which again we'll get into a little bit later. Ethereum's just following what Bitcoin's done, and we can see the S&P. Well, this is the US 500, just because it gives me no gaps within the chart for the closing hours. We can see that's taken a tumble today, and it's a fairly decent tumble. It made a very strong recovery back end of last week, beginning of this week. Down from 3920. Climbing all the way back up to 4080-ish. But today we've seen that tumble again. So we'll have a look a little bit later on about what that might mean and where that might go. Right, let's dive into a little bit of news first, and then we'll go from there. Okay, the Shanghai upgrade, which we talked about last week, has been ever so slightly pushed back into the beginning of April now, but it is still very much on our horizon. And a lot of people are pondering the question as to, well, what's going to happen with the price of Ethereum? Are we going to see a massive sell-off, or are we, going to see people just taking advantage of the fact that they can unstake it and actually see more people stake it because they know they can remove it from the network whenever they need to? Well, this was an interesting article, and the data's been taken from June. For those of you that were in the group back in the Wonderland time days, you'll be very familiar with the website June and all the analytics you can get from there. But it stated that just 16% of Ethereum stakers are actually above water and in profit. ahead of the Shanghai update. So effectively, if the Shanghai update was to happen today, only 16% of those that actually stake their Ethereum would be in profit. Now, staking for Ethereum actually commenced in December 2020. And at the time, if I scroll down to it, the price, 1st December 2020, the price of Ethereum was $612. If you were to stake on that day, that's the price you would have been. Now, the analytics is slightly skewed here, and I probably should tidy that up because that's making the assumption that you bought your Ethereum fresh on that day and staked it. But we probably know that people actually bought Ethereum ahead of that. And sort of 6 months prior to that, we were looking at $200 Ethereum. So the data is slightly off, but we'll go on what the article has produced here. And those that had bought at that time, staked it, and looked to unstake it now, we're looking at around about 150% profit. So the question of, I think everyone has in their mind that people have been staking Ethereum for ages and everyone's in significant amount of profit. But actually, we see that the vast majority of those who staked it, some 84%, actually bought it above $1,600. And so that might add to the thought process that people won't look to sell it off. They're significantly, or at least a little bit, underwater. They've seen the potential of where Ethereum can get to. And I generally believe, in my opinion, that those that understand how to stake, had enough of this Ethereum to stake in the first place, are probably a more well-rounded, sophisticated crypto investor slash entrepreneur, and could probably see the horizon of waiting until the next bull market to actually go to sell. Now, it doesn't mean they won't unlock their Ethereum, so that should they need to sell it, they will do. That could completely happen. But in terms of actually selling volume, the article here is kind of suggesting, it would be a mistake for a large majority of them to do it because they'd be selling into a loss. So just some food for thought there. Moving on to the next article. This one is, pot versus kettle here. But I did chuckle when I saw this article. Alameda Research files suit against Grayscale over self-imposed redemption ban. So the FTX debtors want to unlock $9 billion in share value and management fees that they dispute through the Delaware Court of Chancery. I don't know. Effectively... I'll try and find where it is. I don't want to read the whole article. The plaintiff claims Grayscale charged $1.3 billion in management fees in violation of the trust agreement. So they're a bit upset that someone broke some rules somewhere. Like I say, pot versus kettle there. We know the history behind Alameda Research and FTX, what they've done to potentially their customers. I just found it amusing that they would, one, have the balls to do it, and two, the cheek of them to do it. Now, I'm sure it's just all about shuffling paper around and, countersues and all this kind of stuff. I am not swept up with any sort of legal system, whether that be in the United States or the UK, but it just made me laugh. I won't waste too much time going through it all. As always, all these articles will be posted in Discord afterwards. Stock market. So today was a bit of an interesting day. For those of you that are a bit like me and you check Forex calendar every week, you'll have seen that Chairman Powell gave testimony today, or was due to give testimony today. He's also giving testimony tomorrow. Now, this had a 50-50 chance of this just being a bit of a non-event, but it actually turned out to be more interesting than I potentially thought it would be, because obviously he's testifying and he's being asked direct questions. And instead of like previous news conferences where perhaps he could just toe the party line, he actually gave some full and frank thoughts and feedback on the questions that were provided to him. And without going through every single one of them, there were 26 representatives in the room. I think the vast majority of them asked him questions, but the questions range from interest rates and inflation and how they're tackling that. There was talks about cryptocurrency and how the Fed are managing or watching cryptocurrency. There was discussions on stable coins. But for me, the real interesting information was his stance on interest rates and where he currently sees inflation. And maybe I'm looking over here to try and find a chart which gives me a price. Maybe the markets are starting to price that in now, but it is of my opinion that he was far more hawkish than he's been in his last 3 press conferences. And we started to see him actually talking about things like perhaps this disinflationary period wasn't as clear and defined as we thought it was, and inflation's been a lot more stubborn in coming down. They may actually have to look at interest rates going further than what they'd originally thought of, as sort of 5.25%. There's now estimates we might even see 6% for interest rates. Sorry, I think I said inflation. I meant interest rates. Talking about the next rate hike, which everyone kind of assumed was going to be 25 basis points. He was suggesting that they wouldn't be afraid to make a greater climb if necessary. So that narrative that as commentators we've been talking about higher for longer, suddenly actually now what we're seeing is Chairman Powell actually say exactly the same thing. And getting back to this article, we started to see that sell-off right from when he started to do the talk. You saw Bitcoin actually break slightly below 22,000. We've already covered where the S&P currently is and the sell-off we've had there. And we've seen a rise in the dollar, which is all kind of tying in there. I want to try and find some of the quotes that he's made. There's plenty of sound bites, and I'll find them, the better ones, and I'll post a few of those in Discord for people. But here we go. The latest economic data have come in stronger than expected, which suggests the ultimate level of interest rates is likely to get higher than previously anticipated. If the totality of the data were to indicate a faster tightening is warranted, we would be prepared to increase the pace of the rate hikes. So it's some pretty significant comments he made there. And what is interesting, I don't know if many of you have a look at this chart, but this just blew my mind. So I'm going to have to actually hit refresh because these two bars have changed quite significantly a few times today. So before you look at the bars, tempted not to, I want you to just scroll down I'll zoom in down here. So 1 day ago, on the 6th of March, this is talking about the next rate hikes. So estimating the next rate hike would be 25 basis points. There was almost 70% certainty. That's what people were believing it was going to be. And a 50% rise. There was only about 30% of people that were backing it. Now you look at his comments he's made today, and 8 o'clock this morning, it was the same details. So this changed bang on after he made his announcement. It's now completely inverted the other way. So now there's 70% believe that it's going to be a 50 basis point rate hike, and only 30% are backing a 25%. I won't bother bringing up some of the other charts, but this, when I was talking about that estimation of where we think we might get to in terms of final terminal rate or interest rate final value. Originally we were talking about 5.25%, sort of the summer of this year. Now we're talking about we're going to hit about 6% some of this year. I mean, it's all in this chart here. So CME Group, for those of you that are interested in finding that. But we can now already see that the market is now starting to think that we're going to get towards 50 basis points. Whether or not, the announcement's not going to be made, for another 2 weeks. So whether or not we start to see the market price that in, we'll just have to wait and see. But in terms of sentiment and your narrative, and just trying to understand what might be moving the markets, this is just something to definitely bear in mind as to where that might be going. The other news articles I'm probably going to touch on in a moment. So I think we'll just leave the news there. I didn't actually think I was going to be talking about Chairman Powell's testimony. I just assumed he was going to toe the party line, but we actually got quite a lot of information out of him, which one is good to see. He did make a comment to say that they would definitely make a decision on whether or not they need to increase the speed of the hikes by the next meeting. So I'm sure when we get the minutes for that, we'll have a better understanding of where they were. But we already started to see in the previous minutes that people were on the fence of whether or not we needed a 50 basis points rate hike. So there we go. I'll just have a look at the questions and just see if anything's popped up in the chat at the moment. Everyone can hear me, which is good. Mr. Taco, is this the same price action setup that was done for the January rally? We're going to actually have a look at that a little bit later on, but I think you're spot on there. And then you've also put about just now inverted. That's correct. Okay. Right, well, I'll tell you what, let me have a drink of water and then we'll go into having a look at this strange price action we're currently seeing. So, and I'll move it on to the daily to start off with. Now, on the daily, this didn't really seem like nothing of anything. So we've got BTC chart up here. Don't worry about the indicators at the top, not necessarily relevant, and don't worry about these two blue lines at the moment. But prior to today, you know, we were functioning in a range. It's hard to even get it. Body closes of less than 0.5% for 3 or 4 days. Now you start taking that to the 4 hour and the 1 hour. That's where it started to look extreme. Because as I mentioned earlier, peaks and troughs while moving sideways is what we normally expect to see. Complete flatline, especially on a volatile asset such as Bitcoin, is very unusual. And we want to try and understand what potentially may have caused this. And there's been a lot of discussions about what people think on it, and I'm just going to share a couple of views of myself and what other people are saying, and we can leave it to that. And we can actually have a look at my view on this price action to start off with. Very flat price action tends to lead to very radical moves whenever it decides to move. And prior to Carl's discussion earlier on today, you can see the candle in which he was talking. There it was. Nice wick down, the wick back up. It could have gone either way. We could have seen this just being a very regimented, neat, bearish rectangle, and for further breakdown, looking at around about the 20k. But I also, wouldn't have been surprised to have seen Twitter feeds filled with Bart Simpson's head upside down, because we've just done an inverted Bart Simpson and actually seen the green candle whip all the way back up to around about 23,000. Just to complete that, that kind of stuff does happen. We can't ignore it. But generally, low volume, low price movement, builds up over time, like sticking your finger in a dam sort of thing, and then when you take it out, it explodes with a hell of a lot more pressure. And that's exactly kind of what happens, in my opinion, with this type of build up here. We're starting to see something at the moment. Whether or not this is anything and nothing, we'll have to wait and see. We haven't actually really closed and broken 22,000, which is the start of this range that we formed. So until we do that, I'm going to still treat it as in we're working within this range, and I've got something to actually talk about today. So what potentially could have caused this incident? Well, if we go back to actually what caused the move down, that may give us an indication as to where the potential main culprit is, and that's Silvergate. So Silvergate Bank. There's a few articles here about Silvergate, but for those of you that aren't aware of Silvergate, and you don't necessarily need to be, they are a genuine bank. I think they're based out of California. I'm sure someone in chat can correct me that if I'm wrong. Who provide a significant amount of finance and money towards institutional partners. I don't know if that's my word. Institutions that interact within the crypto market. So, we talk about the likes of Coinbase, Kraken, Binance, etc. FTX back when they were up and running. And because they're a genuine bank, they got quite a lot of stick for this, but they were unapologetically pro-crypto. And when you have a look at the money that they made during the last bull run, they were laughing at everybody else because things were going very well. However, I was going to say due to overexposure to FTX, but actually due to an overexposure within the entire crypto market, because when you look at the data, Silvergate's troubles actually started way before FTX imploded and just mirrored effectively the bear market. But due to their significant exposure within the crypto market, they have been booking record losses, for the past year and a bit now. And what really sort of spooked the markets finally was last Wednesday, where they had to effectively announce that they were unable to file their accounts because they were still being investigated and audited, which pretty much spooked every last remaining investor there was. We then started to see on Thursday, it was Wednesday that was announced, I think on Thursday, we then started to see the likes of Coinbase. Let me find the list because I want to get them all right. Sorry, let me scroll down. So, yeah. So just reading from this account here, from this paragraph here. So Coinbase, Paxos, Circle, Internet Finance, Galaxy Digital, and a hell of a lot of others all sort of publicly declared they would no longer be utilizing Silvergate. Drove their share price down even further. And they have financial obligations that they need to meet, which I think is, I want to say it's on the 16th. It might be the 17th. It might be the Friday next week. And it's anticipated that they're not going to be able to make those. Now, that led to the price falling down. Well, may have contributed to the price falling down to the level that it is. But why has it managed to stay there? And you know, particularly straight into the weekend. BTC and cryptos don't care what day of the week it is generally. They'll still move the price. But you've got to remember what function Silvergate provided. I'm trying to find which article explains it better. Not that one. It's probably this one here. Yeah, okay. So Silvergate offered a service to crypto exchanges and institutional investors called the Silvergate Exchange Network, where instead of them just being able to trade Monday to Friday in normal trading hours, this gave them a 24/7 access to be able to make transactions. So they could do it through the night, and they could also do it on the weekends. Well, this has been withdrawn. Not only it's now been withdrawn, but prior to that, we had the likes of Binance US, Kraken, Gemini, and whatever Iris X is, stop using it. So that first weekend, straight after this happened, we suddenly saw a flat movement in the price. And the question is that because these large institutions did not have the access they would normally be granted because they no longer had access to 24/7? They were working 8 hours and 5 days a week. And the reason that I now have these two on here is this is the next weekend. It'd be interesting to see if price also goes flat in the next weekend. Maybe that'll give us an indication as to whether or not, you know, the lack of volume and a lack of funds available to institutional investors is what is causing this very flat narrative. So Silvergate went on to announce yesterday, I think, that they were going to actually be fully closing down the Silvergate Exchange Network. Maybe it was Friday. Yep, here we go. Effective immediately, Silvergate bankers made a risk-based decision to discontinue the Silvergate Exchange Network. The company said on the website on Friday, all other deposit-related services remain operational. So that's no longer there. So that's obviously why I believe it tied in with the weekend. Now, this has then obviously pushed, where are a lot of these businesses going to go? And there's not many crypto-friendly banks in the United States. I don't even know if Signature is one that's based out there. Maybe someone in chat can tell me. But that's the only other one that I'm particularly aware of. So is it a case that Silvergate is what is causing this? And now we're just seeing retailers who are pretty spooked anyway, not really doing too much, and prices just ever so slightly ebbing and flowing. But, you know, if we have a look at the number of candles, I mean, it's on the 1 hour. How many candles is this? Okay, until it broke down, it's 112 candles. So it's a fairly decent amount of candles there, of it moving within that 0.5% range that we talked about. And even now, as I say, it's brought back up. There's plenty of time left on this hourly candle mine, so we're not. So maybe that's potentially it. But I've seen other people talking about a few other things, and one of the things that people have been talking about is Mt. Gox. So we've covered this a number of times on here. That Mt. Gox is looking to, well, will be Mt. Gox creditors, will start receiving, I'm going to call it Bitcoin, but there are other ways in which they can be made, but effectively some Bitcoin they've been managed to be recovered, start being sent out to creditors from March 10th. Now, just to reiterate for those that haven't watched this previously or aren't aware of this, this has been known for some time. We've probably been waiting about 12 months for this. About 6 months ago, the creditors were all notified. They had an opportunity to elect how they wanted to be paid and when they wanted to be paid. And that payment tranche 1, starts from the 10th of March. It actually runs all the way to the end of September. So to think that $3 billion worth of BTC is going to hit the market on March 10th, as in Friday, is highly unlikely. I don't know what the schedule is. But the fact that they're giving 6.5 months to pay it out makes me think, or 6 months to pay it out, makes me think that it's not all going to happen on day one. Otherwise, why give the whole 6-month period? But people have been talking about, are people just waiting to see what happens with Mt. Gox and then the market will move? Well, for me, well, the other thing on top of that, and we've already discussed, is Ethereum and the Shanghai upgrade and the opportunity to unstake your cryptos coming in April. Is that going to have an impact with a significant amount of Ethereum being available to be sold on the market? I suppose I have a different view of that. I don't believe that those two news events are particularly leading to why we're seeing the market like this. And the reason I say that is, if you look at any other event that's happened, whether it be the halvenings, whether it be the merge, whether it be significant news about any other token or any other market, there's always that narrative of buy the rumor, sell the news. And so had that been the case, I would actually expect the actual opposite to have been occurring and the market to be moving definitively in one way or another on the rumor of what was going to happen. And then just prior to or on the actual date of an event, that's when you see something completely different happen. That seems to be the standard playbook that happens there. And we're not getting that. We're getting just shock. Someone's been punched in the nose and they are just frozen still kind of attitude. We've had a bit of a smelling salt afternoon and perhaps we're seeing some sort of reaction to that, but not a huge reaction at the moment. I mean, ultimately, even if you have a look at candle close to where we are now, we're only talking about a 1% move, a $250 move. The fact that I'm getting excited about a $250 move in Bitcoin just shows you how stagnant it's been for the last 4 or 5 days. So yeah, it is strange what has happened here. It's not usual type of activity that is necessarily what we're used to seeing. Within the crypto market, and it's not just BTC. We've seen a lot. Ethereum. Okay, the range has been bigger, but generally it's just been working in that flat range. DOT's been slowly trending downwards, but generally it's just sideways movements. Try and find another big one. BNB perhaps. Okay, had a bit more of a dip, but I suppose BNB and then FUD. You can kind of expect that, but you can see what I mean in terms of just sort of moving in a very unnatural action. Link's a little bit different there, I suppose. We're going back to BTC until I really prove myself wrong. Looking at too many altcoins. So sorry, I completely lost my train of thought there. So if we have a look at something that Mr. Taco pointed out a little bit earlier, and that is that stagnant price action moving sideways generally leads to some sort of big move. And I've not gone through and listed every single one, but I have started to list a few. We're on the weekly chart. I just needed the weekly chart so you could see these three at the moment. So you look at the action that we're talking about. It represents that one weekly candle. So this other price action that we're talking about is happening over significantly longer time periods. But it's the principle that we're just trying to address here. And the point that we're trying to make is actually flat action leads to large moves. And so I'll move it down onto the daily now. We'll have a look at this one in January. So, from the lows that were created from FTX, yeah, we ranged a little bit, but generally it's pretty flat. And when we saw that explosion up, the Bart Simpson, the double bottom, the W formation, whatever it is that you want to call it, we had relatively stagnant price activity moving in a tight range with low volume, and then suddenly it exploded up. I have to go back to the weekly so I can scroll to it now. Oops, too far. We have a look at 2020. Again, drop down to the daily. I just knew it was going to do that. Here we go. So again, fairly ranging activity. It's not as flat as what we've been here, but again, it's over a longer period of time. And then we see that nice move up. And then we saw that rips all down. But, that was caused by the Chinese virus, and there's all of the markets closing. How the markets would have reacted if that not occurred, we will never know. But the other one that really sort of initially draw my parallel to was this one, because this one was, in terms of range and flatness, look how small those closed candles are. Some of those tightly packed ones we got for days we were moving in a $20-$30 range. We did this over quite a significant amount of time. And this was October into November of 2018. And then that led to that huge movement down. I mean, that was a 50% price loss in the end. I ain't suggesting we're going to see a 50% price loss. I have no idea which direction it's going to go. Just the principle that we start to see things snarling up, everything getting squeezed, volume's pretty low. With low volume, there's thin buy and sell walls in order books. So then when you do get significant volume, it can just burst straight through those. And that's not necessarily what worries me, but that's kind of where I feel we're going to go. We're suddenly going to get some volume, and order books, whichever direction it goes in, are going to be eaten up very quickly. I would be surprised, not impossible, but I would be surprised. I don't know why I didn't just put this on the weekly instead of scrolling. If this just continues to meander, little bits, at some stage we're going to see a movement. What else could it be? So I was just looking at some things today, and according to CoinShare, so this is Coin Bureau, who was referencing CoinShare, institutional investment vehicles for cryptocurrencies have seen their 4th week of outflows this last week. So perhaps there just isn't enough money swirling around. And so going back to where we were, we're not necessarily spending. Institutional investors don't necessarily have the pots that they are used to playing with because they've been taking either profits or just moving money out of the market due to uncertainty, regulation stance from the SEC, etc., whatever the narrative necessarily needs to be. And I kind of want to show you this chart. This is something that's called the dumb money confidence indicator sentiment, and it's a very interesting chart in terms of it effectively shows you where dumb money believes to be. And if you just want to understand how you play it, here's a very simple explanation. When dumb money, even that's a Freudian slip. When dumb money is overly bullish, you should be bearish. When dumb money is overly bearish, you should be bullish. Goes back to Buffett's, if there's blood in the water, buy, etc. But this is just on a graph form. What we can see is, although it has moved down, this is over the last 3 years. Let's just bring it a bit closer over the last year. So end of February, middle to end of February, we could see that dumb money was very high. Okay, dumb money was overly bullish. So we've seen now smart money, institutional investors, have been taking their money off the exchange. They've been selling. Yeah, it's time for them to take profit. They've been taking profit whilst dumb money's been buying it off them. And now they've been taking money away. Dumb money's cooling. We'll wait. They'll get overly bearish. And then smart money will look to keep on buying. And, that's generally how it feels it is at the moment. Okay, yeah, we've seen it dip down, but it's kind of feel like it's not going to reverse here. Well, it might reverse here, but the likelihood is we're going to see this continue to progress down over time. And if that's the case, generally going to lead to it. Now, I should say this isn't a crypto chart. This is the SPX, but you can correlate that across as you need to. I've seen this chart plenty of times. I actually had to sign up to this today just so I could show you guys in the group. It is pretty expensive. I'm only going to do the taster experience. It's not a chart I'm going to be regularly looking at. They do have loads of other indicators which I may have a look at, and if I find anything of any interest that I actually understand, I'll be sure to post it into the group. But yeah, I kind of have to agree with CoinShare and what Coin Bureau put there, that it looks potentially like institutional investors are being smart. They are taking profits, moving money out of the system, however you want to look at it, and just waiting to see what the next move is. And it's okay. Maybe that's another factor leading into why we're seeing such flat movement. I think I've kind of flogged that one to death. So just check. Nothing really else to add there. So let's just minimize that. And we will end up moving on to talking about our research token. This is where I probably am not as prepared as I would like to be, but the show must go on. And if you see me looking over to the left, or you look towards my notes or feel a bit scripted, it is a bit scripted, because off the back of last week with the Moonbeam research token, you all saw in RT and in Vimo that I did 8-minute version of what I talked about for 25 minutes. And I'm going to do exactly the same for every research token we look at every week now. So you can look forward to or dread those videos being uploaded at your pleasure. And so I have written a little bit of a mini script, and normally I try to ad-lib from it, but just given where we are today, I may be looking a bit more to the left than usual. But let's talk about this research token rather than what it is at the moment, just a bit of an intro to it. So this isn't like previous research tokens that we've talked about, whether it be AI, whether it be things like Near Protocol, even Moonbeam. This isn't necessarily a new token, and it isn't a small microcap token either. Chainlink has been around a long time. It's been a very popular token. It's been talked about a lot. It has an awful lot of partnerships that we will have a look at in a moment. So in terms of how I'm going to take this research, I'm not going to be looking at the minutiae. I'm not going to be checking their LinkedIn to make sure that they've got a decent amount of staff that are on there that should be doing what they should be doing. I'm not going to be checking their socials to make sure that they've got followers and active communities. We know they do. This has been a behemoth. We know the team is very good. If they weren't very good, they wouldn't be able to secure the number of partnerships that they've got. But I will still focus on, what is its use case? What is its tokenomics? Where is it going? Whether or not it's a good, what the negative sides of it is, and where we're going to have a look at. So we're still covering, the main core pillars of what we do within the research token. It's just 99 to 100% of you will have heard of Chainlink, whether or not you know what it is. You would have heard of it because it's been such a big thing. So let's try and understand what it is that it actually does. Okay. So at its basic level, Chainlink tries to solve the age-old problem of crap information in equals crap information out, or crap results out. So if you're wanting high-quality results, you're going to need to ensure that the information that you're working off is of the highest possible quality. The data is of the highest possible quality. And that is what Chainlink effectively, well, it does multiple services, but its primary service is there to do. And it provides a wide range of decentralized applications with accurate real-time information from an off-chain source. I was going to say the external world, but that sounds a bit too out there. Yeah, so from an off-chain source that can be provided reliably. So that information, once it's verified, can then be used accurately and reliably off-world, and in this case, in the form of smart contracts. Now, everyone talks about smart contracts as if they are, the thing that's going to revolutionize Web3. It's going to take over a load of people's jobs, and it goes on about it's going to revolutionize how we interact, how we determine value, and how we finalize agreements in the future. And it is, of course, that's what smart contracts attempts to achieve. But we've got to understand that for it to be able to do that, the information needs to be accurate. Now, this is where the first problem that Chainlink is looking to solve is, because the positive things behind decentralized blockchains, secure decentralized blockchains, is that by their very nature, they try and limit themselves from centralization so that they can remain that impartial information. Well, when we're now talking about the accuracy and the validity of data, there's a problem there, because if you just stick to the closed off single entity decentralized nature, whatever data they're providing, how do we guarantee the accuracy and the validity of it? I'm not saying that they are necessarily bad actors deliberately putting poor information out, although they could be. But in timely, ever-changing information, we need to make sure that that has been provided, particularly if we're going to rely on it for very important smart contracts, which, let's face it, are going to, hopefully, if this all goes well, add up to values in the billions, if not trillions. And if that information is inaccurate and unverifiable, then it questions the trust in the smart contract, which ultimately then makes it fall apart. Sorry, I need to scroll down just to make sure I'm going over the right things. So we need that data to be of the highest possible standard for it to sit within a smart contract. And so Chainlink has come up with an additional infrastructure to securely verify and validate any information. And it's going to use, it's going to use a thing called an oracle. So Chainlink is a decentralized blockchain oracle network that is built on Ethereum. Now, we'll talk about Ethereum and other blockchains in a moment, but just for your knowledge, it's built on Ethereum. And the network is effectively intended to be used to facilitate the transfer of tamper-proof data from off-chain sources, as we talked about, onto smart contracts, and then again back to an off-chain. I feel like I'm repeating what I've just put here. Yep, so I did say this. It allows smart contracts to access external data in a secure and reliable manner. Should have just read it. Which is crucial for all of these blockchain applications, but also real-world, off-chain applications as well. Let's have a look. So some of the sectors that it's involved in, and we're going to talk about the amount of products that are out there. It's astronomical. But financial markets. So, understanding where financial markets are, confirming orders have taken place, whatever that may be. The cryptocurrency itself, how does CMC, CoinMarketCap, know the price of BTC? It needs that real-time information, validated and verified from multiple sources to be provided. But also order book information and everything else that goes with it. Looking more further away from that, weather information, temperature readings from multiple weather stations across the country, across the world, all being fed back and verified. We can look at other applications of it in terms of sporting results. And with the validation of sporting results, again, multiple sporting results happening in real time across multiple games, across multiple countries. That also then feeds into the betting industry, one of the biggest industries that we've got in sports books. People need to have the confidence that that information is correct, because particularly in betting, you can take payouts almost immediately as things are happening. So the sports books are not going to be wanting to pay out if the information is false. And anything, basically, the Internet of Things, sensor readings, or whatever, can all be used and we can be validated across that. And if we have a look at, just realized I've left this chart on the whole time. Apologies there. This is what I should have had on the screen whilst we were chatting away there. At least got something a little bit more attractive to look at. But I'm going to move you straight on from this one and have a look at the ecosystem. And here we go. 1,713 projects with 2,045 integrations. So we're not talking about something small here. We talked about Near Protocol 2 weeks ago, which had 1,000 projects live on it. This has got almost double that. So this is a highly used, established project at the moment, Oracle network. So that's great. It's already got all of these projects, all this information, and if we have a look at, I could scroll down for 5 minutes because it lists all 2,000 odd of them. I'm not going to stop on any in particular on purpose. I'll just sort of pause it. You can see all of these are here. These are either crypto related or they are off-chain. It doesn't necessarily matter. The industries, DeFi, NFT, gaming, blockchain, data providers, node operators, DEXs, the different chains that we're on, the different types of products that we're doing. We'll have a look at data feeds and VF and automation in a little bit. So yeah, it just keeps on going. It keeps on going. It keeps on going. It keeps on going. It keeps on going. You kind of get the point of where it is. So a highly versatile product which is well established and used across multiple sectors, which is very positive. The rational biohackers put, is a token actually used for gas fees? Don't buy Inu. Oh, what a name. What a name. I'll go into the tokenomics in a moment, so you just have to wait there. this, again, only just scratches the surface. I don't bring this up necessarily to go through every single individual point in this. I want to draw your attention to the second to bottom line, which is all blockchains and layer 2. So we talked about that it was built on the Ethereum network, but it is accessible across multiple blockchains. And you look at some of the blockchains we're talking about here: Ethereum, Bitcoin, BNB, Polkadot, Arbitrum, Avalanche, Solana, Polygon, OKX, Phantom, Akala, Hyperledger, Carver, Harmony, Hedra, Hashgraph, Algorand, Moonbeam, Crypto.com, and then just this small caveat here, plus hundreds of other blockchains. So, you know, the software, the applications and the projects that's been used upon are all across Web3, all across the crypto space as we know it. And, you know, smart contracts, you look at most projects out there, that's one of the taglines in there is always, it's a smart contract. Well, anywhere that you see a smart contract, Chainlink or one of its competitors is integrating itself within that to provide the validity and the accuracy of the data. And, you know, even this bottom line, you know, I look at it more from the Web 2 side of things. Web 3, okay, fine. But look at the Web 2. Yeah, some of the companies there that are also utilizing Chainlink. So this, you know, as I say, I slept on this. I didn't know anything about it till, you know, really a couple of days ago. I understood that it was for data management, and that was about as far as I really understood it. But the more I've looked into it, the more how established I've seen and what it actually does. Brilliant, you know, very positive to see. Okay, so let's just make sure. Well, we're going to talk about that in a moment, so we'll leave that on the screen. So I talked about the different services that it provides, and there's four key ones really. So that decentralized data feeds, that's kind of what I was bumbling through for the first 10 minutes. So that validation of data to feed into smart contracts. Then we got this one, and they call it verified random functions, so VRF. But effectively, it's providing verifiable sources of randomness, which again may not mean anything to you. But if there are any gamers out there, or those of you that like to gamble, particularly on things like slot machines, you'll probably have heard a term called RNG, which is random number generator. And effectively, what that does is just provide some. I had a better word in my head a couple of hours ago, and I can't think of it now. So the spontaneity, the unknown element into something. And if I can give you an example of that, and sorry if this isn't the best example, it just popped into my head. You take a game, a really simple, basic game, something like Donkey Kong, which effectively is you're a character at the bottom of the screen, and you've got to navigate upwards up ladders and bridges to get to the top of the screen to rescue someone. And your main obstruction the whole way are barrels that are coming down to take you out. Now, if those barrels just came at regular timed intervals, every time you played that game, after a while, you would get to understand exactly what the sequence was, and there'd be no challenge to it, and you'd complete it, assuming you had the dexterity to move the joystick or whatever. Where the RNG comes in for video games is providing that spontaneity, that difference. So the sequencing of the barrels, or the timing between the barrels, or the number, or the speed, or whatever, the variables that actually provide a different experience every single time you do it. It's exactly the same with slot machines. You're pressing just one button, but 3 to 5 reels are spinning, and they don't always land on the same ones. There's an RNG element in there. So it provides that. That's another one. It also enabled automation, which we didn't really go into, but we mentioned it as one before. And one of the problems initially with smart contracts is even when you got the data, it took a manual input to then confirm that the data has been verified, to put that within the smart contract, and for the smart contract to be actioned. This now is enabling that automation. So effectively, once a predetermined set of conditions or prerequisites have been met by the data, which is validated through the oracles, etc., then the smart contract is completed and it's shipped on. It's all done automatically. So I would have honestly thought that was prerequisite to all smart contracts, but perhaps maybe in the early days it really wasn't. And then we've kind of touched on it before, but that's supporting cross-blockchain interoperability. We've seen just how many blockchains it interacts with. So one final thing to really talk about what it is. And, this is by no means an in-depth look into Chainlink. If you're really into how the noughts and ones work, then I recommend you go in and have a look in a bit more detail, whether that would just be through the website. Chainlink's got a good YouTube page. It does little 2-minute shorts of a lot of the different aspects, although I did find most of them repeated themselves. But maybe you'll get more out of it. But yeah, there's plenty of information out there as to how it actually works. So these oracles, these oracles are nothing particularly special. They're effectively just a piece of software that acts as an intermediary, translating and verifying that data that we talked about from off-chain to on-chain, back to off-chain, real-world, smart chain, real-world, however you want to look at it. But the key thing is that they don't act on their own. It's not just one oracle. Because if it was on one oracle, you've got exactly the same problem that you have if you didn't use the blockchain technology in the first place. It's too centralized. It's got that single point of failure. So instead, Chainlink uses a system of nodes, or Chainlink nodes as they're called, to retrieve the data from multiple sources. It then verifies the accuracy of that data across multiple sources, and then it delivers that to the requested smart contract. And again, it takes out that single point of failure. So the nodes themselves are incentivized to provide the accurate data through the token reward system. So getting into, I'm looking over the screen here, the rational biohackers question on that. One of the things is there's a reward system for validating, I was going to say validating the network, but validating the data through the oracle. And yeah, as I said, the decentralized nature of that ensures the single point of failure is effectively in inverted commas, erased. Okay, so we're now starting to talk about Link. So Link is the native token for Chainlink. It's LINK, for those of you that have never seen it before. And the question I always ask, and I've moaned about this several times, and we will come back onto this, is why have a token? Why need a token? What purpose is a token actually provided? And my worry with 99.5% of all altcoins out there is that it's just a utility token to serve as network transaction fees or what have you. It doesn't really have any utility beyond that. And that does worry me. So I thought, well, I'll have a look. What does it do? So I had a look in the white paper, which I'm afraid to say the white paper is an incredibly dull read. It looks like a university paper with quotes and references and all that kind of stuff. It's not clean. It didn't even have a tokenomics section within it, or if it does, it's not particularly labeled. But going back to the token, it identified it as Link is the ERC20 token used to pay for services on the Chainlink Oracle network. It essentially powers the architecture of Chainlink itself, requesting contract holders to use Link to pay node operators for their work providing the data needed. So that's all it is. Its main utility is for transaction fees. So that's what it does. Comment on what we think of that a little bit later. Okay, so let's have a look at Chainlink data from CoinMarketCap. So I'm looking at my notes here, but things have moved a little bit. Just double check. So it's ranked 19 on CMC. I think CoinGecko, it's around about 22, so relatively close to each other. Price at the moment is $6.72. As you can see, it was $6.80 last time I had a look at it. All-time high was achieved on May the 10th, 2021, and that was $52.70. So we're looking at around about an 87%, 87% drawdown from its all-time highs. Its current trading volume is just over $265 million every 24 hours. It's got a market cap, my data is definitely going to be changed, of just under 3.5 billion. A total total supply of 1 billion tokens, and its current circulating supply is around about 520 million tokens. So around about 52% is available. So what else do we need to know about tokenomics? Well, normally this is where I like to dive in and have a look at how the tokens have been broken down, allocations, and vesting schedules. I've got to say that the information that's provided within the Chainlink white paper is particularly poor. And what I could find in relatively short notice was particularly poor as well. So this is the best I could find for you. And I've seen this diagram across multiple sources. So it's not a lot of information, which isn't particularly good, I'm not going to lie. So it was set up as an ICO back in September 2017. I should say that it was founded and created by Sergey Nazarov and Steve Ellis. In terms of the breakdown of the tokens, we know that there was 1 billion tokens, and the ICO and then an additional public sale. So the public sale tokens available was 35%, so 350 million tokens. The node operators and ecosystem, so effectively staking rewards, was another 35%, so another 350 million tokens. And then the company, in inverted commas, no breakdown on what that is, got the remaining 30%. So that's it. I couldn't find a unlock schedule, a release schedule. I couldn't even find any inflationary information about it. So I will do a bit more digging on that. But at the moment, I couldn't really find much, which does make me, I'm not going to lie, particularly nervous about that, because we know there's 520 million tokens are out in circulation. We know that 350 million of those were sold to the public. What I don't know is how much of the remaining 170 million that are out there have come from the company, and how many has come from node operators and staking rewards. I can get an understanding of staking rewards when we talk about staking a little bit later on, but I still don't definitively know the answer to that. So that's something that I would usually like to know. And for something that's been around for so long, I would like to, I'd like to think that should be readily available. But unfortunately, it's not. One of the things that I missed, so we said that it was 19 in CoinMarketCap. Go back to historical data. So I told you that its market high was on the 10th of May. Well, I could only find historical data close to that. It was on the 9th of May. And we can actually see that it got to 11. So that's as high as it got. Not a bad, climb on the market cap. So, we talk about research token we mentioned at the beginning. This is a biggie. This is a big token that perhaps I should have known more about, but I didn't. But interestingly, you could argue that it actually made it into the top 10 because we can't really count Tether as a token. So you take that one out there. I'm going to say it was originally last bull in the top 10. What is interesting from this, and I'll go back to the other chart. If you have a look at this chart here, this is the price over time. It's linear, not logarithmic, so it does look pretty flat at stages. But it, unlike most other tokens, it made its peak in the April-May run of 2021. And actually in November, I wouldn't say it struggled, but it certainly didn't replicate the heights that we'd seen a lot of other tokens do. Now, it's fair to say that in 2020 and the beginning part of 2021, DeFi was very, very hot. And I'm sure that helped drive up the price. And you look at some of the other comparative DeFi tokens like Avalanche and a few others, they seem to emulate a similar kind of pattern as not claiming further all-time highs in the November rally that we saw in BTC. So, I look at that from a price action point of view. This is a perfect kind of buying opportunity in terms of it's flatlined, it's near where its base has been. We've already talked about upside. We know it's a killer. There's definitely potential to get there. So I just want to quickly talk about staking. Sorry, no, I don't. There's one. Just go back to talking. There's one other thing that I could find. I'm gonna have to bring my notes over because I pasted it in. And that's this. I'll zoom in. So I couldn't find any clear vesting schedule. Now, that 35% I talked about nodes and an ecosystem. This is the only data I could find on that. So, and it's not. I think it was as of beginning of February. So it's a couple of weeks old. But have a look. Of that 350, I needed to verify this, don't get me wrong, but I did see this table several times. Of that 350,000, 30% of it is held within the top 10 wallets. And of the top 100 wallets, 74% of 350 million. So quick maths there is going to be what? Round about 85, 87. That's 260 million tokens. It's held within the top 100 wallets. Again, I don't know how much of that has been released or what, but you know, that feels like a rather large amount. So we'll talk about negatives a little bit later on, but that's just something that I saw there, which caught my attention. Right, so let's have a quick chat about staking. So there is, in theory, staking that is available. You can stake your Chainlink. However, you can't stake your Chainlink anymore. So in version 0.1, which is what's currently launched at the moment, they only offered 22.5 million link tokens to be staked. And as you can see here, all 22.5 million has been filled. Now, you do get a staking reward. It started off at 5%. It said approximately 5%. We now know it's 4.75 with an asterisk to it. And the asterisk is nowhere to be seen. So we don't know what that asterisk means. And I can't click on it either. So there is an asterisk. I'm sure it'll say that that price is not guaranteed to remain at that level. So you can't actually stake any link at the moment. Now, they have announced that they are, I'll just go to this next document. The staking version 0.1, as we said, is live on mainnet, and that's got the 22.5 million. I scroll down, I'm probably not going to find it quickly, so I won't bother keep on looking. But effectively, they've said that they will be launching a version 1. And within that, they're going to increase the staking by another 50 million. So that'll be 72.5 million tokens that will be available. Now, if the speed at which that 22 million filled up is anything to go by, if that is something that you are interested in, you need to find notifications, join their socials, because once it's released, and I don't have a date or a time frame for when that's going to be released, I imagine it'll fill up rather quickly. One of the problems, though, is currently, if you do stake, and if you manage to get into version 1 when that launches, there is actually no mechanism currently to unstake your token. So a bit like how Ethereum was, if you were to stake, it's locked up indefinitely until version 2 is released. Now, there's no actual date for when version 2 is going to be released. I've seen people say it's going to be in 6 months' time. I've seen people say it's going to be in 12 months' time. The feeling that I get is no one actually knows when it's going to be. And there's no definitive date that's been provided by Chainlink. So, again, if you are lucky enough to manage to get staking abilities, you just got to know you're going into that. And at the time, you will not be able to unstake it until such time as version 2 is released. There's a bit of a roadmap here. Roadmap is a loosest term. This is more what each of them is going to achieve. But we're in version 0.1 at the moment. So, yeah, in terms of competition, before we get into negatives, so I think it comes technically under the data management section. Now, the data management section is pretty long. So if we look at those that are using that Oracle, inverted commas, technology, I think the two biggest ones that are out there are Band Protocol, so this one here, and API 3. Now, they are competition to them, but to be fair to Chainlink, Chainlink is significantly bigger than both of those, both in terms of market cap, positioning, socials, whatever you want to look at, but also in terms of live projects and integrations. So, you know, those two need some work to do to catch up with them. Not saying that they can't, but at the moment, competition for Chainlink is behind it, not ahead of it. So I just want to have a look at potentially some issues that I personally feel there are, and then maybe we'll have a look at some price and where that could go. Just go back to here. And I think, for me, the first issue actually is looking... I've lost it, haven't I? Which one is it? Here we go. But these numbers are actually pretty appealing, pretty attractive. You know, 1,713 projects and 245 integrations. You know, it's fairly fundamentally integrated across many sectors. And I'm sure there are thousands, if not tens of thousands more projects that it could integrate with. But with it being so widely integrated across so many different things, I question whether or not its potential for getting that significant percentage increase year on year is still there. It's done so well over these past few years. Can it still continue to do that year on year? I mean, is that then going to be reflected in the price of the token? Whereas you look at some of the competition, which is smaller, maybe they can start to eat into some of that market share and see that percentage growth more significantly. I do have to question the centralized nature of things. We got to look a little bit at the tokenomics there. The tokenomics certainly drew questions into 30% just allocated to the company, and then 35% just allocated to staking rewards and node validators, of which the wallets we saw 75% of the top 100 wallets. And we're not talking about small amount of wallets. There's 650,000 wallets supposedly being registered a month ago. So yeah, we do need to question something that is so heavily pushed towards the decentralized nature. There does seem to be a very significant centralized nature, certainly to the token itself. And let's face it, most of us are here and not for the technology behind it. We're rather interested in the token and how that can drive it. So depending on when that unlock is that going to cause some downfall to the price? And then I have to go to my age-old question of, does it really necessarily need a token? For me, it doesn't pass the test of needing a token. Yes, it's nice to have its own utility token. Everyone wants to do that, but could it have used another token? Could it have used a stable coin? Like if all it's doing is paying the transaction fees for working, I feel like things should do more than that for them to really justify it. But in the stark reality is they ain't going to change their mind just because old Muggins here doesn't like it. So it is going to be there. So there's definitely an opportunity to exploit its popularity from that. But then the only other issue that I have at the moment is the lockup of the staking rewards. So we've got sorry, my son's sound detector's going off. Just bear with me a second. I don't think he is, so we'll just carry on. If he keeps on going off, I'll have to head up. Apologies, sir. Because you can't unlock rewards at the moment, we don't know where the price is going to go. If we suddenly see a big bull run and then we get the unlock, are people going to look to take profit, and we're just going to get a huge amount of sell pressure immediately? So there's certainly an element of risk, and the fact that it is an unknown as to when that unlock is, it needs to be factored into a decision that you need to make. So there's sort of the four kind of negatives that I saw there. Are people still with me? Yep, everyone's still there. Fine. So let's have a look at price and where we're at with things. We've already had a look at how far it's fallen. So the price is already, from top to bottom was at 90%. But if you have a look at where it is from price today, 87% from where it's all time. So this one has bled hard in terms of altcoins, but that's not a bad thing. What I'm showing here is, if you are interested in this feels like a fantastic place to buy in. Matter of fact, buying in at this price here would be buying in the summer of 2020, in terms of equivalent value. So fantastic. If you'd got in ahead of that bull run there, you didn't know at the time it was going to be a bull run, but what a 12-month period that would have been for you. Looking at it a little bit closer, and I'll try and break it down a bit more. What I have found is how much it's ranged. Now you look at this. I've just put three zones in here. So that top zone where it's ranged around about $9.50, the bottom zone of around about $5.50, and then the mid zone of obviously $7.50. It has been in this range since the Terra Luna crash. So we're talking actually beginning of May. Just over 300 days. So we've been in this for 10 months that we've ranged within this sector, far longer than most other altcoins have. And this is creating a fantastic foundation for a springboard for it to jump off in. And actually then, if you look at it in the terms of the zones that we've been working in, we're in the bottom half as well now. So, if you're looking at thinking about, is this an ideal time to get in? Well, even after all of the worst news that we've experienced, whether that be the December crash, the FTX crash, the Celsius crash, or the Luna crash, all of them have only ever taken them down to $5.50. So we're pretty close to that at the moment. And so if it is something you're looking to get into, maybe we're now in this, being in this bottom zone is the, I'm going to change the color, don't worry, is the perhaps you might want to consider buying zone, because it's traded down here, but it's not that big a further fall down to the bottom, which is established, but bounced off pretty hard each time. And then you can have a look at, if you wanted to try and take some profits a little bit later on, because you still think we're going to continue to range for the next 9 months. If it ever does get up here and then you start to see it be rejected, have you got another opportunity? But a rejection from this top level does tend to see it bounce down to the bottom, and a rejection from this bottom level does tend to see take it all the way back up there. So it's almost 100% swing within that. My summary on it and where it's at, I did sleep on this one. I feel this is an ideal opportunity to get back into it. I do like the use case. I do like how involved it is, how many different integrations, how many different projects it's got. I think the price is very good for what it's at the moment, and in terms of potential upside, I definitely see the positives. It's a well-established, well-known name, which is available on just about every exchange you could ever imagine, whether it be DeFi or centralized. And so I don't think we'll have a problem with selling volume or anything like that. Am I going to add it to my portfolio? I'll be honest, yes, I probably will. Hopefully that won't be the case of every single research token I do. I am going to have to try and decide what I want to do in terms of managing the pot allocation, just because I do want to try and keep my numbers of tokens down, definitely below 20 and ideally below 15. At the moment, I still have got room to add this and still meet that. But yeah, I think I'd like to see where this one goes. I do have my concerns with it. My main concern is its utility. But ultimately, do I necessarily care? Probably not. If people are happy to buy the value of this token, whether they are actually having to use that to expend that token to pay for it, and we know there's a lot of projects on it, so a lot of people are having to pay for it, or people are just trying to ride off the back of that, then fair enough. Tokenomics, I'm going to dig in over the next couple of days, see if I can find any more information about that and how reliable that is. Anything I do find, I will obviously provide to you guys. But yeah, that's my 40-minute version of Chainlink. As I said, tomorrow I will film a sub 10-minute version of it, which will then be released hopefully on Thursday. That's the plan. I'm going to try and do that every week, as I say. So if you just want to have a look at that, instead of having to go through all of this again, then that's what you can go and do. Are there any questions on Chainlink before I move on? Okay, perfect. Let's just minimize that. That's where we see the BTC almost at the 2000 level now. Okay, right. Well, let's have a look at price action and where we are in terms of sentiment. Sorry, I'm just checking this on the 3-day chart at the moment. So last week when we had a look at things, we had drawn that support line there. On the 3-day, a lovely clear break from there. We actually put it onto the daily. We can tidy it up a little bit. We had a break, a Kobo, so broke through, Kobo'd off, and it's come back down. And this is now starting to look a little bit more like bear flag, bearish rectangle. Potentially we're breaking it. Definitely want to see how this candle is going to close. We've still got 3 hours, just under 3 hours left of that there. We've got to go. Where next, though? Where can we see BTC going to? I haven't got a high block loaded up, so you kind of just... I'll load it up in a second once I've done some other things. But in terms of just eyeballing across previous areas where it's turned around, and we can see how that ties in with other things. I mean, changed the color to green, didn't I? Let me change that back. I prefer it being orange. So this is my next target, 21.5. I don't even think it's that big a support, if I'm perfectly honest with you. But a break of that, and that's when we're going to be testing the psychological level in and around 20k. And I actually think what we might see is a break through 20k, because when I do get high block opened up, you'll see that there is some liquidation levels in and around 19.5 to 19.7. So that's where that's going to potentially be drawn towards. Whether or not it closes below 20k, Doesn't matter for liquidation levels. Spike down to it's all they need. But yeah, I could definitely see that there. What other things could you argue that we can see at the moment? So double top, I'm not necessarily too sure that it is a double top. This one here it's climbed a little bit too much for me. Could we then just be forming a gap? Maybe we bounce back here and create a right shoulder, quite possibly. So we need to look at. I've seen some people try and claim that this is a head and shoulders. Shoulder, head, and then that shoulder there. I don't know, a bit too messy. I don't know where you'd get. Ooh, that was horrendous. Attempt to draw a line freehand. Don't know where you'd get your neckline from that. So I'm not necessarily buying that. I'll be honest. What we can say is that rejection at 25,000, the summer high, summer 22 too high, clearly happened. That coincided with hitting the 50 moving average on the daily and the 200 on the weekly. So some strong levels there. It was a clear rejection. And at the moment, it doesn't really seem like we've got the sentiment to drive that up. From a TA point of view, as I say, levels that we may see a bounce are here and maybe here. But then when you factor in the headwinds that we have been facing in terms of news and regulation and wider macro economics, I don't necessarily feel like we are in a position in which that's the play. I'll throw up some fibs, have a look. I mean, try and tidy this up a little bit. I don't know whether to take that. I do it from spike to spike. That's looking kind of nice with it's bouncing down and playing off the 382. If I do it body to body, we've still got a little bit of room to go, but the 382 is tying in quite nicely with this level that we drew there. Typically, I use body to body, so that's where we go. And then again, this 0.5 level at 20,600 again is tying in with that other level. I just try and get high block over. Just bear with me. I really enjoy using this tool now. I have to admit. I imagine after what the Powell speech today, we've probably had a significantly larger amount of shorts being placed. So we may see some interesting data. I'm going to move to the 7-day. We'll add BitMEX once it does it. We've got Binance, BitMEX, and Bybit data. So the most we can get. We'll hit run. Let's see what levels we've got. Just zoom in. Okay. So in terms of shorts, you can kind of see, can't you? It was a nice green. Powell starts talking yellow. So we went from like, I mean, still a decent amount, 5, then went to the 6s. We're just about getting to 6.6 there. So levels of interest when we're looking at it from this point of view, 21,550, and to the upside, 22,700, which I've talked about a little bit a few times. 23,200 is another one that I've identified several times. That I think are areas to go. But 21,522 was a level that got hit today during Powell's speech. So the next one is 21,500. So let's just go back to our charts. 21,600 and 21,500 is our box there. So kind of tying in. Seemed like an obvious place to go. What I would say is if you buy into using this and you buy into the narrative of market makers, they don't give a shit if it goes up or down. They're just after the liquidation levels. They're after the liquidity. So, a spike up to take out this, it seems very juicy. Both there and there. It's an awful lot. We're probably talking, by the time you went through all of those, $20 billion worth. So there's plenty to go at. Doesn't mean it's going to happen overnight. Doesn't mean it's going to happen tomorrow. But certainly ones that we want to have a look at. I think very, very short term, the market's probably got very bearish off the back of just some words someone said. And so actually maybe market maker might do max pain option, which is the opposite of where everyone thinks it's going to go. So yeah, we need to sort of bear both of those in mind. But if I was to draw areas of interest, I'd have those done. I'd probably draw a box. Well, I have drawn a box in another chart. 23,200, which is basically there. That'd be the areas that I'd be looking at. Okay. I mean, in terms of hourly, I really wasn't going to talk about anything because I thought it wasn't going to do much. And yeah, it's moving down, but it hasn't broken that far yet. It had that big pullback, and then we started to see this just sort of slow bleed down. But we're only talking $400. So I don't think there's anything to get particularly too excited about. If you do still have a bullish narrative, not necessarily something to completely fear. Have a look at some of the other ones. So Ethereum. I mean, this one seems to have broken it. I mean, let's get back onto the daily. I think Ethereum has probably looked a little bit messier for a while. This one does look more like a double top. I know it's not particularly clean, but there's a bit there. It can retrace it down. There's another bit there. That's starting to look like it. We're on the neckline of it at the moment. We're interacting in and around that. And so, an obvious level is exactly where we are in terms of what that might do and where that might go. I'm sure we could tidy up and make that look a little bit better. But the bottom of that really is 1,500. It's kind of where we're looking. Could you say down to 14.62 maybe before you actually got some confirmation there, but a close below around about 1,500. I think that's probably going to tell you where you're going to go there. Just for old time's sake, we'll throw the fib on. See if it ties in with anything. So yeah, 1,500, 382 again, working out quite nicely in terms of areas. Can you do high block for Ethereum? You can. Should we have a look? I never use this for Ethereum. It should be interesting. What have we got? 7 day. So 1510, $3 billion worth down there, long liquidation levels. Okay. Yeah, maybe we've got an opportunity there. We already might identified that. So that's, I think, 1510, 1505. That seems to be a nice little magnet there. In terms of the other side, it's above 1,700, and we can see here it's kind of above the highs there. I mean, we could definitely get there. Whether or not we lightsaber up there is another question. In case of DOT, so I mean, DOT's been resting. It's kind of just broken it. I was looking at this earlier. DOT had been, you pull this one all the way back, kind of been playing in around that zone for a while. Today it's broken it. There isn't really much left to hold it up, Do we see 15.15? We lose that. Do we now see a retest at under $4? I mean, under $6 feels great. Getting down a bit lower potentially, definitely potential there. DOT had a really good run after a horrendously terrible year in terms of price action and how it looked. I think this used to look very positive for it in terms of high lows and higher highs. But again, breaking that structure there, however you want to have a look at it, it's come back down. We've lost this layer at the moment. We've still got a bit of time left in the candle. Maybe we can gain back within it. But even if we do, we're still kind of forming a continuation pennant out, which generally would lead to the downside. And I think we're going to see ADA. I mean, you could argue, for those of you that like to play compressions, this is a pretty tasty compression, actually. That does stand out straight away. But overall market sentiment does not necessarily tie in with that. Definitely one to watch. Near the apex now. Typically we expect to see it do that. It's got a decent angle to it. Retest up to 42. It's a 25-30% return. So potentially there's something there. BNB under $300 again. Been that for a few days now. Again, I've sort of questioned how this is bear in mind, I mean, it's not just a utility token to get you cheap fees on Binance anymore. Let's agree that Binance Smart Chain, everything else, it's got more utility than that. But back when it was worth $600 a token, just didn't seem right for me. It generally did perform well over the last 6 months compared to a lot of other things. So is it still slightly overvalued? I personally believe that it is. We're at a pretty crucial level again in terms of where we are, and certainly in terms of this year's history. And a break of that, and I think we're probably going to see a retest in and around just under 270. The problem with throwing a fib out here is it's had that retrace and pullback, so I'm not really sure where maybe we could do it. Okay, so this is pretty good. I was thinking bounce back, and then where's it looking? I mean, it's on that level there, the extension level. I had to kind of do it in reverse. I appreciate. So maybe we're down to the extension to 270, maybe, and look quite nice playing those with wicks and bodies on the way down. Link, did we actually talk about it from a micro point of view? I can't remember now. What the hell? I should know. That's pretty embarrassing. That one didn't really work there. I was hoping that would look a little bit cleaner with the bodies, but it doesn't. Kind of expecting that 382 level. This low actually happened a little bit later than the rest of the market. The rest of the market was beginning to middle of December. This was right on the end. It's had a sharper run up. Decent level of support at the moment. This 665. We want to see that one hold. And if it doesn't, let's get rid of that. Like it. I'll probably be looking in around there, so around about 630. And then the rest is kind of where the rest is. I mean, we can go through loads of those. But yeah, that's where that is. I'll just have a quick look across, see if there's anything else that's been added. I think that's it. The world economy won't save ADA. That's one thing I forgot to mention about Chainlink. Whether you love it or hate it, they are quite heavily intertwined with the World Economic Forum. I know there's some in the group that see that as a particularly bad thing. I don't necessarily disagree. The clandestine organization that those guys seem to be. So yeah, Chainlink does have quite significant ties to them. So something there to consider. Is there anything else anybody wants to ask? There wasn't any questions on the question sheet. If anyone's got any questions they want to put in chat now, be an ideal time. Just do that. Okay, probably doesn't look like it. Right, guys, well, this has been a little bit shorter than previous. I think price action's kind of dull. Maybe getting a bit more interesting now. This recording will go out tomorrow. We'll have the Chainlink research video under 10 minutes that will go out on Thursday. You've probably seen the notification at the moment that Simon is in Thailand. He won't be doing a live this Thursday. He sent out a few other things. Have a look at the glossary. If there's anything you think is not correct there, please let me know, or let someone else in Discord know. Try and change that. If there's anything you want to add, I certainly have got a few things I think it's now pertinent to add to those, because I think it was originally put together probably about 8-9 months ago. Then yeah, we'll certainly have a look at that. I think that's probably everything I've got to say there. Just want to say thanks a lot for those of you that stuck it out. Hopefully you gained a lot from that. All the information that I've talked about, research notes, everything else, as usual, will be posted on Discord. If you have any questions, please let me know. And please, if anyone's got a research token or a token they want me to look into, no matter how small, add it to the list. We don't have anything yet for next week. I'll give you guys a couple of days. If not, I'll just choose one. But I prefer to do one that you guys do, because it typically is then something I don't know and don't have a favored sort of aspect towards that. So it'd be well worth it. Anyway, apart from that, I hope you have a great evening and the rest of the week, and I will speak to you all soon. Thanks a lot now.